Hey there, it's J-Rod here for Rich Retirement TV, and for the last few months, I've really focused on small speculative companies in the tech space. And if you follow my videos, you know we've done very well with those picks. But today, I'm going to take a break from those names to focus on an even bigger opportunity that's developing right now. Dividend stocks. Specifically, we're going to take a look at some breakout names from the S&P Technology Dividend Aristocrats Index. And if you're unfamiliar, these are just stocks, these are tech stocks or tech-related names that have paid out dividends consistently for at least 7 years and also increased their dividend payouts. Right now, many tech stocks don't pay dividends. They prefer, when generating earnings, to pour that capital back into their business as opposed to paying out shareholders. But there are a select few of these stocks or companies that are paying out these dividends. And right now, as we're kind of thinking about inflation for the first time in a long time, these companies, the income that they're generating on the shares that you own, when you're seeing these payouts increase 5, 10, 15% year over year, in excess of, well in excess of inflation. You've got kind of the best of both worlds, right? You've got, the upside that you get from tech stocks, which have been the undisputed leader in the markets for the last 10 or 15 years. But you also get, the safety of a reliable dividend that can add anywhere from, 3, 4, 5% annually to the shares you own, and compounded over 5, 10, 15 years. That really adds up. The S&P Technology Dividends Aristocrats Index is up more than 180% over the last 5 years on a total return basis versus the S&P total return, which is just above 115%. So a big margin of outperformance for these names over the broader index when you include dividends. So today we're going to focus on 3 breakout stocks from this index, and a lot to love here. So let's go ahead and dig right on in. So if you take a look, first stock on my list is HP Incorporated, ticker HPQ. If you don't know them, they're one of the biggest computer manufacturers in the country. And as you can see here at the chart, big breakout here. This is a long-term weekly chart of HPQ. And as you can see, just a massive breakout above $26 to a fresh 4-year high. Not only the stock, surging. I mean, really, it's more than doubled in the last year. But they pay an annual dividend of 2.6%, which is awesome. You take a look at the 10-year Treasury; it's yielding just 1.5%. Even after the big move, that's nothing compared to what you're getting from HPQ here. So my target on this stock, price target, is $40. That offers you 33% upside from where the stock is trading now, and getting into this stock right around the breakout area, you've got a lot of safety, hopping into the shares here as it rides higher. So a lot to love there. So next stock on my list is GLW. That's Corning Incorporated, and they are the makers of Gorilla Glass. If you're unfamiliar, that's the glass that you'll find on the front of iPhones, Androids, tablets everywhere. They also make large panes of glass for ultra high D televisions, and they make glass for fiber optic cable. So they were very plugged into the tech space, both on the commercial side and on the consumer side. And these guys, again, just like HPQ, surging here since 2020. You see a big breakout here in the stock above $40, and you see really the stock's traded in a range between 35 and 40 for much of the last 4 or 5 months, breaking out solidly above that on above average volume, which is something I really love to see. Gives me it's confirmation that the breakout is for real. So really, you take a look, go back a little bit further, and you see the stock's really traded in this $40 to $30 range. My price target on the stock is $50. That's 25% higher than where the stock's trading right now. And I love this, the stair step higher, and this big breakout about $40. A lot of room for this stock to run. Again, as we're seeing a lot of economic improvement, money in pockets ready to spend. So take a look for GLW to continue to surge higher and collect that dividend while you're waiting. Last stock on my list, ticker ADP. This is Automatic Data Processing Incorporated, and they're basically one-stop shop for digital HR, human resources services like payroll, employee relations, what have you. They've really they're offering a lot of big services to a lot of big clients all across the world. And boy, business has been very good. The one thing I love about ADP right now, you take a look at 180 here. The stock just smashed through the 2020 top here, and just take a look at the chart. There's a beautiful chart here, lower left to the upper right, and again, as companies, as here in America alone, as we prepare to reopen, as businesses ramp up hiring and expand their services, ADP is going to be well in demand here. But again, you love that breakout above 180. You take a look here, just over the last year and a half. See the stocks really traded in this range, in a beautiful kind of triangle, ascending triangle pattern here. You get a top here at 180, and then you've got, grab my pen here, the stock is bottoms out here around 110, so that's a $70 range. You slap it on top of the breakout here at 180. That gives you a $250 price target. That's about 32% higher than where the stock is trading now. And for your troubles, you collect a 2% dividend on top of that. A lot to love here. In all three of these names here, HPQ, GLW, and ADP, all three of them are offering you more than 20%. 25% upside, up to 30-35% or so, and each one is paying a dividend annually of at least 2%, and has a track record of boosting that dividend for the last 7 years. So a lot to love here, especially if you're looking to generate income now, and you also want to take advantage of the capital appreciation that technology stocks offer you. So again, a lot to love here. And thank you so much for watching my video today. Again, I'm J. Rod for Rich Retirement TV, and I'll see you next week.